So, the 2026 housing market. It was supposed to be the one where things finally started heating up this spring, but instead, it seems to have just stalled out. We're going to dig into what's really happening in this massive market tug-of-war.
I mean, that's the million-dollar question, right? From first-time buyers to people trying to sell, everyone's wondering the same thing. The market should be buzzing, but it really feels like someone just hit the pause button. So what is the deal?
All right, let's get right into the hard numbers. Pending home sales, and that's just contracts that have been signed but haven't closed yet. They've actually dropped 2.8% from this exact same time last year. And that's our first big, clear signal that people are hitting the brakes. And look, it's not just the buyers getting cold feet. Sellers are holding back too. New listings are down 1.2% year over year, which of course means way fewer choices for the buyers who are still out there looking.
So you put those two things together, and what do you get? A 1.9% drop in the total number of homes for sale. But here's the real kicker. This is the biggest drop in inventory we've seen in more than 3 years. So the market isn't just cooling off, it's tightening up in a way we really haven't seen for a while.
So why all the hesitation all of a sudden? Well, economists are pointing to this thing they're calling the anxiety pile. It's basically this collection of worries that are just weighing on everybody's minds, making them think twice before making a huge financial move like buying a house.
Senior economist Joel Berner really nails it here. Let's be honest, a shaky economy is not when most people want to make the biggest purchase of their lives. And the conflict in Iran was just the latest worry to get tossed onto this already existing pile.
So, let's break down what's actually in this pile. You've got global conflicts, you've got ongoing uncertainty with tariffs and trade, a stock market that is all over the place, a labor market that felt pretty soft last year, and then you've even got these future fears about AI and job security. Any one of those is a concern, right? But put them all together, and you've got a really powerful headwind. And chief economist Lisa Sturdivant points out that all this anxiety is just layered right on top of what's already the biggest challenge, affordability. I mean, even if you just ignored all the headlines, high home prices are still a massive barrier. It's really no wonder that cautious is the word of the year. Okay, let's switch gears and talk about the one topic that seems to have everyone confused, mortgage rates. Because honestly, depending on how you look at them, you get two completely different stories.
And this is where it gets a little weird. If you look at rates day to day, they are super volatile. They're just bouncing all over the place. And that makes buyers really nervous. But if you zoom out and look at the whole year, rates are actually down. They're a lot lower than they were a year ago. And that disconnect is causing a ton of confusion.
The numbers really do tell the story. A year ago, you were looking at an average 30-year rate around 6.7%. This week, it's hovering closer to 6.0%. So, despite all that daily noise, the bigger trend has been a clear win for buyers.
But here's the catch, and it loops right back to that anxiety pile we talked about. For rates to keep on that downward trend, the market needs to feel confident that geopolitical conflicts aren't going to start driving up inflation. And with oil prices jumping around, that's just not a guarantee. That is the main thing holding rates back right now. Okay, so after all that, you might be thinking it's all doom and gloom. But it's really not. Actually, for buyers who are willing to navigate all this uncertainty, this market is offering up some real glimmers of opportunity. Let's look at the other side of this tug-of-war. And this is a huge one. Because of those lower year-over-year mortgage rates, the average household has about $30,000 more in buying power than they did just 12 months ago. That is real money. It's a tangible advantage that you have right now.
I absolutely love this perspective from senior economist Kara Eng. She just frames it so perfectly. Maybe you missed that absolute rock bottom rate, the quote flash sale, but what's on offer now is still a major discount compared to last year. It's all about perspective.
And get this, here's another really interesting piece of the puzzle. Almost 45,000 sellers who couldn't sell their homes last year decided to give it another shot in January. Now that is the highest number for a January in at least a decade. So what does that tell you? It tells you there's a fresh wave of potentially very, very motivated sellers hitting the market. Which leads us directly to this crucial piece of advice from Asad Khan. He expects these sellers to be more flexible because, as he says, they've already been burned once. So the big takeaway for you, buyers have leverage. Don't be shy about negotiating or asking for concessions. You might be really surprised at what they're willing to agree to. Okay, so let's pull all this together. What on earth does it all mean for you? Well, what we have is a market that's basically in a standoff, with these really powerful forces pulling in completely opposite directions. It's a classic tug-of-war. So let's just lay it all out. Pulling on one side of the rope, you've got those headwinds. The big anxiety pile, ongoing affordability problems, and those jumpy daily interest rates. But pulling just as hard on the other side, you've got some powerful tailwinds. Mortgage rates are lower than last year, you've got more buying power, and there's that new wave of motivated sellers.
And all of that leaves us with the final, most important question. This is not a simple buy or don't buy market. It's a market where fear and opportunity are sitting right next to each other. So after seeing all the pieces on the board, what's the right move for you?